What's up, everybody? It's the Common Sense Investor coming at you with another video. And in this video, we're going to talk about the success of the Galileo FX Forex Trading Bot this week. As you can see from the thumbnail, we were 80.39% accurate on the week. And I learned a very valuable lesson called What is Drawdown, which is our lesson of the week, lesson number 6. But first, let's talk about the results of the bot. If we look at our Google spreadsheet here that I made, you will see that, scroll down to the bottom, you have access to this, and scroll down to where you see the description and click more, and you will be able to see the risk management strategy Google Drive. That is this right here. And you can follow along during the week all the different trades that we'll be doing using the Galileo FX Trading Bot. Now, you will also notice that I track what percent my portfolio is going up during the week, okay? And we went up 15% on our portfolio 3 weeks. So this week we averaged about 6% increase, which helped out last week because we were training and learning new bots. 80.39% win rate this week with the Galileo FX bot. Now, some people are having an issue with me and my results, talking about, well, you're only making 74 cents and 47 cents and 44 cents. Let me tell you something, people. Risk management on priority. And if you look right here, you'll see the lot size where I've got 0.02, 0.02, 0.05 from where I average down, 0.02, 0.04 where I averaged down and I closed out the trade. All right, 0.02. I'm keeping all of my lot size small so that I can control the losses that I make. This is a loss. I'll make that change later. So that I only lose pennies when I lose the trade, but I only win pennies if I win the trade. All right? But this is going to change because the lot size is going to increase. Therefore, the profits will increase starting next week. Because I found a bot that has a performance level higher than Galileo FX. It's an indicator, a trend indicator. And people, it is 100% accurate on my back test. I'm going to show y'all that in the next video. But for now, I want to talk about what is drawdown, because by understanding drawdown saved me this week when I was in a trade for 23 hours and I was down $20 and I went past my risk management tolerance for one reason and one reason only: drawdown. So what is drawdown? Well, take a look at this blue line that you see here on the screen. All right, imagine you open a $1,000 account and you started trading Forex. All right, the first thing, and it's amazing, every professional tells you this, the first thing to understand is your drawdown. That means how much the currency, the stock, or the crypto can drop before it makes a profit. All right, for example, you open a new account. I got one for $400, and I got a drawdown, I know, from doing back testing of 1%. So I can expect my trade to fall by 1%. Now, that doesn't mean it's going to stay down 1%, 2%, 3%, 10%, or whatever percent you're using for a drawdown. It's not saying that you're going to lose that money. It's saying expect the stock, the crypto, or the currency to fall to this level, and you can learn what your drawdown is but you can expect it to fall by that much. All right, before it rebounds and goes back up. Now, that's the thing with the bot. It buys at pretty much the worst time. And when the crossover happens and it tells me to go short and I go short, it buys it on its own, and then it begins to fall. I'm cussing like a sailor because the bot was wrong. No, the bot told you you have a 3% drawdown from the balance of your portfolio. So you can expect it to fall that much. So when I knew what the drawdown was on the play that I was in for 23 hours, I knew what it could fall to, which was around $25 or $30 before my drawdown was over with. But by the time it reached the drawdown and then it reversed just like it's supposed to do, and it went back up, and I was profitable. All right? Drawdown. If you don't understand, if you cannot grasp the concept that you're going to get in a play that goes against you, you're going to have a lot of anxiety and stuff in the market because the trade that you get into goes against you, but you didn't account for the price going against you, how far it could go before it reversed and went back up. So when the stock ran up and I was short, and I'm going, oh shit, I'm getting close to my stop loss, all right, and my drawdown. So knowing that I was reaching my drawdown, if it drops below my drawdown, I got to get out of the play because it's bad. But once it reaches the drawdown, it should reverse and go back up. It's that simple. Now, understanding drawdown will stop your anxiety, and you can't figure out, should you get out the play? Should you stay in the play? You should know the drawdown. And you learn the drawdown when you do the expert advisor, strategy tester, and you say optimization and start. And when it's done, you go over to your optimization results, and in a column of its own, it tells you what the drawdown is or what you can expect the stock, crypto, or currency to fall. In this particular case, it's telling me that the currency can fall $15.25. That's the drawdown before it could reverse and go back up. And I'm going to profit $6.69 on this trade. All right. And then it even tells you the drawdown percent. That if you start with $1,000 and you got a 15.24, then you're going to drop 1.52% of your portfolio before it would rebound. All right. Now, it don't have to start off going down. It can start going up, come back down, start going up, come back down. But the most that it should drop is $15.24. And I have a decision to make. Do I want to take this strategy that 1.52% of my portfolio will drop? All right. Or if you look at the third example, it says here it'll fall 2.7% of the balance of your portfolio before it rebounds. Knowing that, I was comfortable when that son of a bitch hit $20 going down. I said, well, it's still got $7.55 of drawdown before it could reverse. Luckily, it reversed before then, before it reached the drawdown, and started going back up, and it went up like a rocket after that. I averaged it down along the way. Once I knew I was getting close to my drawdown, just in case it reversed, I'd have something at the bottom. I'm going to teach y'all about how to do an effective averaging down strategy, okay? So I took this strategy. I knew that it could fall $27.55, and I knew that that was 2.7% of my portfolio, and that I should expect a profit of $2.90. Now, it could go higher than $2.90, but I know that that's at least what it should make. Understand? So, I hope you learned something here. Drawdown helps relieve your stress. I'm not cussing the computer or the chart anymore when it's falling, because I'm now looking forward to reach your drawdown so I can average down and start moving up. But if it passes the drawdown, that is your exit, because something is wrong in that currency. So with that, I hope you learned a little bit. Talk to y'all later. Love y'all. Be blessed. See you in the next video.